Good evening and welcome to this session of the live virtual classes organized by the Board of Studies Academics of the Institute of Chartered Accountants of India. I'm sure many of you are posting good evening. I saw Navneet ji and Linga ji. Now I have Savia Khan and Geeta Murigodra. Thank you very much for your greetings and I greet you all well. Adil Khan also. So others can also do that. I think you are directly messaging me, whatever it is. I thank you for your nice greetings. And then Sumi, Prerna, welcome. Okay, now anybody else coming in and greeting, I greet you, and all of you who are out there listening to this live or maybe later, I greet you. Moving on. Yesterday, we did cover quite a lot of ground. We covered two major sections, 128 and 129, which I'm sure you have now understood. We also saw the definition of financial year and linked it with this, and I hope you got the point. And we saw CFS, consolidation of financial statements, so on and so forth. So, continuing where we left off, the central government may, on its own motion, suo motu, or on application by any company or class of companies, exempt any company or class of companies from operation of section 129 or the relevant rules. Okay. Generally, government companies are exempted and all. Again, it must be in public interest. This is just an enabling provision. No company has been exempted as of now, except these companies which have their own law. Therefore, they are exempted. But that is exemption. That exemption is given in the law itself, right? In addition to that, the central government has the power. As usual, there is a penalty for non-compliance with section 129. Here again, it is applicable to only the MD, WTD, Chief Financial Officer. See, because the company is not made liable here. Do you notice that normally the company also will become liable? Now, in this case, the company being an artificial person, how it can be punished for not maintaining accounts or not preparing financial statement? That is the act of an individual. That is the failure of an individual. So they are identifying those individuals whose duty it was, who should have done this, and they have not done it. Therefore, they are punished. Managing director, full-time director in charge of finance, CFO, any other person charged by the board. Right. If in case company doesn't have any of these, no MD, no WTD, no CFO, no other person has been charged under 129, then all directors will come in. So in the absence of any of these people, all directors. So you will notice that it is the primary responsibility of the MD. The MD cannot say, I have given it to somebody. He will be jointly liable. And in this case, for 129, they have included imprisonment. Up to 1 year imprisonment. Up to 1 year. You might ask, why here only they are retaining imprisonment? Reason is this. Friends, the confidence that you and I have in the corporate world, in the market itself, is based on availability of financial statement. Companies should regularly close their accounts, get it audited, lay it before the general body, and file it. If they don't do that, then there is a lack of confidence in the system itself. So anybody who is contributing to that, anybody who is responsible for that, is not only committing an economic offense, it is also an offense against society. Criminal. That's why imprisonment. See, generally, crime is an offense against society. Whereas failure, maybe of a law, could be an economic offense. Okay, default. Not that that is in any way good, but between the two. Whereas anything that offends society as a whole, sir, when A kills B, definitely B and his family are affected. Beyond that, society is also affected because if A is not punished for killing B, murdering B, then so people will get the wrong message. Anybody can kill anybody, and then we will be reduced to Gundaism and gang war and all sorts of things that we see. Sometimes we see movies where, in remote parts of Uttar Pradesh, Madhya Pradesh, the Thakurs can come and kill and all that. I mean, that is law where there is no law. There was a lady called Fulan Devi. So she forget, whether she knows the law. Fulan Devi, whether she knows the existence of law. Okay. In those cases, society has to punish so that more people will not have the guts to do it. So such punishment, once they see one MD going to prison for not filing, for not preparing financial statement, then every MD will be worried. Oh my God, I will go to jail. And he'll be careful. So that is why they have included imprisonment here to 1 year or fine 50,000. Since the word or is used, it is quite possible for the MD to go to the regional director or the tribunal and say, I have done this. It was not done with intention to do anything, but my own mistake. I'm not aware. I'm an engineer. I'm so and so. My father is the owner of this business. I'm only second generation. I'm a useless fellow. Something because of which I have not done this. Now you let me allow me to pay a compounding fee so that can be. But luckily, this or suppose it is and gone, no option like dividend, non-payment of dividend, gone. That's it. No compounding. You will be convicted for the offense. Okay. So that again, dividend is also an offense. See, one company doesn't pay dividend and they are just paying some 500 rupees penalty and going. Everybody will think, okay, so what? I'll pay 500 rupees. Whatever the penalty. Sir, at a certain level, some rich people are there. For them, 50,000 is nothing. 5 lakh is nothing for that man. You'll throw it at the face and go. So you cannot legalize crime. You cannot give a license to commit an offense. That's why the penalty should be very stiff. If the penalty is not stiff now, it is a license to commit that crime, like license to kill. So they will say, okay, I'll pay. I will do. There should be a deterrent. Sometimes that is why, Judaic law, or as we call it, Quranic law, makes more sense. Eye for an eye, hand for a hand. I mean, I'm saying sometimes the punishment should be so heinous. The punishment should be so terrific that the heinousness of the crime should be reflected in the punishment. Okay. Only then they will be, next time nobody will do it. That's the point. Okay. So that is why imprisonment is included here. Correct? Yeah. Mr. Manish has put up the link for WhatsApp. Those of you who want to share or use it, can use it. Okay. Good. Now, 129A also we have seen periodical financial results, quarterly and all that. That is, anyway, listed companies are bound by the SEBI guidelines to file. In addition to that, unlisted companies, please note, listed companies anyway have to provide. Central government may require such class or classes of unlisted companies as may be prescribed. As of now, nothing has been prescribed. Okay, as of now. But they may come out with such form, etc. for quarterly or interim financial or periodical financial. Interim financial reporting is there. Limited review, as we call it. It's very, very important from exam point of view. The small section, if you are able to remember, they've kept asking many times. They've been asking questions many times on this topic. So, who has to sign? The financial statement, including the CFS. CFS means, see, you'll notice one more thing. I'm jumping suddenly to 130, after 129A, I'm jumping to 134. Those of you who are having the institute book in front of you will get worried now. Where is it? It is not there. Don't worry. I am not going to 130. I'll come later. Because of logical continuity, I'm going to 134. Don't think that I will not cover 130, 131, 132, 133. It will be covered. The order I'm changing. Okay, so you may have to push the pages a little bit to locate 134. Our institute material is organized strictly in section order. But as I am teaching this subject, to help you to remember, yaad rakhne ke liye, I am trying to teach in the logical order. That's all. It is not yet a crime. Kindly oblige me and turn the page. You will go to 130. I don't know which page it is. It's there in the material. 134. Okay. Good. Some students will immediately ask, which page? Tell me. I don't know. Just turn a little bit. You'll get. Better still, don't open the material. Abhiya, now, keep it. Listen to me. Later on, you can study the material. Okay. Don't do the simultaneous review of material. Don't audit my lecture with the institute material. Okay. You can do that later on. Okay. So I leave it to you. If you still want to keep it open, keep it. It will give you some emotional satisfaction. Keep it there to say that what I'm covering is there in the material. Agreed. So now we just move a little bit. 134. So 134 talks about authentication of financial statements. Right? 134. 1, 2, and 7. 3 sections. 3 subsections are covered here. First is financial statement including CFS. Consolidated financial statement. CFS means consolidated financial statement. We saw that now. Holding company or subsidiary ka combined accounts. CFS. Okay. Or associated company. So when we combine and present it, it is called CFS. So that also has to be signed. Okay. Who will sign it? It should be approved by the BOD. First of all, there should be a board meeting, either physical or video conferencing or whatever. And it should be approved by the BOD. Then it should be signed on behalf of the board by, if there is a chairperson, then the chairperson who is authorized by the board. So it's enough if the chairperson signs. No chairperson or rather chairperson is not willing or not authorized by the board. Then 2 directors, out of which one shall be MD if any. Be very, very careful. Company is having MD. He should sign. Out of the 2 directors, if there is MD, that MD should sign. MD cannot say 2 directors, no, Mr. Donkey and Mr. Monkey, you sign. They will not sign. No. If MD is there, MD has to sign. Okay. Then Chief Executive Officer, if such a man is there, he has to sign. She has to sign. Chief Financial Officer, if such a person is compulsory to be appointed and appointed, that person has to sign. And of course, our good friend, the company secretary, has to sign. Hey, key managerial personnel, come on, sign. Okay. Now, so all these people have to sign. Either chairperson, then CEO, CFO, company secretary. If chairperson is not there or not authorized by the board, 2 directors, out of which one shall be MD. And our friend, the company secretary, shall sign. He or she cannot quietly say, no, I'm company secretary. I will not sign. He has to sign. She has to sign. Okay. In the case of OPC, 1-person company, there will only, see, it's enough if 1 director signs. Because though OPC can have more than 1 director, only 1 member, the director can have up to 15 directors it can have if it wants. Only that 1 person will become the director also. Next one, his wife may join. So 2 directors and the gentleman will be OPC. Okay. Whatever it is, it's enough if 1 director signs for OPC alone. Okay. This is all fairly simple. See, this is a question asked in the examination. Okay, based on this topic. This 1 slide, if you know this question, you can answer. Alter Limited has on its board 4 directors, W, X, Y, and Z. In addition, the company has Mr. D as the MD. The company also has a full-time company secretary. See his name, Mr. Wise, on its rolls. Okay. So one boy kept on asking me, sir, what is the meaning of otherwise? What is the meaning of otherwise? So I told him, boss, when they are giving you a list of items, then they'll say otherwise, then anything which is not covered in that list also, other than what is covered there also, will be covered. That is called otherwise. For example, in some sections, you'll find like 372, sorry, old, now I think 186. When you do it in the self-paced module on your own, you will read it. 186, wherein you will find purchase, acquisition, purchase, or otherwise. Shares acquisition by way of subscription, purchase, or otherwise. Purchase, subscription, purchase, otherwise. So what is otherwise, sir? Like that they were asked. What I explained like this 2 or 3 times. I explained. See, there's a limitation to language. Even Hindi, Tamil, English can only explain to a person. But beyond that, even his mother tongue of Tamil, I explained to him. But no, sir, I don't understand, sir. What is this, sir? Then I said, look here, Baba, I'll explain to you otherwise now. Yeah, tell me, sir. You are wise. I am otherwise. You are wise, ma. I am otherwise. Oh, otherwise means other than wise. Sir, now only you are told the correct meaning, sir. Thank you, sir. See, that boy was happy with the explanation given, but in a way, why other than wise also explains otherwise. You define wise, and then you say anything otherwise also is the other than wise. Okay, is the point. That which is not this is the other. Okay. So like that. Anyway, so this gentleman is called Wise. Wow. Okay, the company also has a full-time company secretary, Mr. Wise, on its rolls. The financial statements of the company for the year ended 31st March 22 were authenticated by 2 of the directors, X and Y. Is it correct? Examine the validity of the authentication of the balance sheet and statement of P&L and the board's report. What would be your answer in case the company is an OPC and there's only one director who is authenticated? See, this is nothing but applicability of this section. So since the company has an MD, 2 directors can sign. There is no chairperson, so 2 directors have to sign. One of whom shall be the MD, if any. In this case, we have an MD, Mr. D. Therefore, D and any one of the 4, XYZ, should sign. And definitely Mr. Wise has to sign. Therefore, since the managing director and the company secretary have not signed, the authentication is invalid. Stands. Okay. So this, once they have asked this type of question 2 or 3 times, 3 marks. Now, we already saw that now. Continuing. The auditor's report shall be attached to every financial statement. I explained to you now the meaning of the word attached. Stapler. No. Clipped. Not stapled. It is only clipped. Okay. Signed copy of every financial statement, including consolidated financial, if any, shall be issued, circulated, and any notes annexed to annexed. So notes, so it's like this, yeah. Balance sheet, P&L, statement of cash flow, statement of changes in working capital, statement of changes in share capital, then notes. Together staple. That becomes one balance sheet and then annexed. Okay. Auditor's report is attached. Board's report is attached. Together that becomes the financial statement. That bundle. So the financial statement, then notes annexed, etc. Then the auditor's report, board's report. That becomes one bundle. That bundle has to be sent to the members. So now we move on to in this chapter, they've also covered board's report because Board's report is part of the financial statement. So the board's report is also prepared. Board's report is also known as annual report. Okay, it is also known as annual report. It shall be prepared based on the standalone financial statement of the company and shall report on the highlights of performance of subsidiaries, associates, joint venture companies. See, generally the board is giving a reply. In fact, they can make many statements. See, they will always just use the word your company because they are addressing the shareholders now. So they will say your company has done this, your company has done that, so on and so forth. These are the various things that are to be in the director's report. Should I know it by heart? No. But generally, yes. And this highlighted HANA director's responsibility statement, very important. Try to know this list of items, what are to be there in the board's report. Rarely they have asked. Still, since this is a longer edition of the session, I have to cover it. But relatively less important from exam point of view. So I will, if I were you, I will not waste my time mugging up all this. But I will know it. Broadly, I will know it. Director's responsibility report by heart. I will know it by heart. Okay, because that seems to be important. Generally, you should know what is there. So you have to give the web address where the annual return has been placed. So you can go and download it. How many meetings of the board were held? Number of meetings of board. Director's responsibility statement or director's responsibility report. Clearly, the directors will state whether their responsibility they have. See, many times the board of directors, once an audit is conducted and the audit report is issued, simply they raise up their hands and say, it is not my responsibility. Auditor, go and catch me. But the law is now very clear. Sir, primary responsibility for internal control is director, not the auditor. Any internal control weakness, it is not the auditor's duty to report because the statutory auditor is only giving a report on the financial position as on the date of balance sheet. Of course, if in the course of his audit, he comes across any fraud, he will report it. But if it's a well-laid collusive fraud and he doesn't report it, it doesn't matter. If it's well-laid collusive, but if it is something that he should have immediately reported just by a simple audit, you would have discovered, or at least he should have given a clear-cut idea. The basic internal control is your job. The director's job, MD's job, audit committee's job. Whether there is an internal control framework, whether one man's work is naturally verified by another, whether there is a supervisory control over certain critical areas, whether cash handling is monitored, whether cash handling is avoided. These are all internal control issues. Whether vendor selection is based on fair method, related party transactions. These are all your responsibility. Whether related party transactions are at arm's length, a certain level, the audit will make an inquiry. Based on the section only, we will see. But going beyond that itself, whether there is any prejudice to the interest of the company, it has to be seen. Okay. See, later on, when you come to final, you will study the topic of independent directors, wherein there lot of conditions are placed on independence. If a person is to be called an independent director, he has to maintain certain things. For example, he should not enter into any commercial transaction with the company, subject to a certain limit given, 10% of his income. Beyond that, he cannot do. So on and so forth. So a lot of conditions. That's a topic by itself. Not for it's in final. When you study on your own for self-paced module, you will come across that. Now, what you have to understand is every year these independent directors have to give a declaration that they continue to maintain those qualities. That in the meantime they have not done something by which they have lost their independence. Okay. Similar, for example, they should not hold shares. They should not have borrowed. So many conditions are there. Particulars of contracts or arrangements with related parties in Form AOC2. Related party disclosure is there in the board report. Remember, it is also there in the main audit notes on accounts. In the AS 18, we report. Okay. AS 18, we report. In addition to that, the board has to give here. AS 18, here, it also there. Okay. Conservation of energy, technology absorption, foreign exchange earning. Those days, these were all very important. Today, again, it is becoming important. Today, one of the buzzwords, one of the buzzwords in the corporate world and corporate governance is ESG. Am I correct? ESG. So, environment, sustainability, governance. Environment, sustainability, governance. ESG framework. Many companies that want to export are very particular about getting ESG certified. The reason is many foreign buyers will not buy from you unless you are ESG certified. See, the Americans are not very worried about their environment. I'm not joking. You can check out, go to the net and find out. There are many violations there. They are the gross violators across the world. Okay. But when it comes to other countries, they will insist that we should be ESG compliant. And they will put all sorts of conditions. For that, they will again earn money by giving consulting for that also. Okay. So, but anyway, that's part of the game. Environment, sustainability, and governance. Okay. It's very, very particular. Okay. In fact, I will not name any brand. Any brand of bottled carbonated drink, any brand. Why mention one brand as if the other brand is good? All brands. Okay. If you go to the factory and you see the bottling and you see how, I mean, it's done very clean, but just one bottle of water, carbon, essence, sugar, 6 teaspoons of sugar to 8 teaspoons of sugar in every bottle. No wonder entire populations of country are acquiring diabetes faster. Rather, they are losing the pancreas are getting affected faster. And early diabetes, 40 years diabetes, 45 diabetes, okay, sugar imbalance, cholesterol, obesity, standard. So, I mean, the ESG is a big subject. It's an ocean. Okay. Sustainability and governance. Okay. Minimum what you can do, what I do, I'll tell you. It may not make a difference. By using teaspoon, I cannot empty the ocean, but I will do my part. I will reduce plastic usage by always keeping in all my vehicles, my car, two-wheeler, and wherever I am, there will be one paper bag, one cloth bag. Cloth bag, shopping bag, cloth bag. So that whenever I go shopping, I won't use plastic. I won't encourage the use of plastic. I will buy and put it in my bag and bring it. Like that, stop using plastic water bottle. Don't use PET bottles. Carry your own water wherever you go. Refill it from safe sources. Okay. Bottled water is as unsafe. Don't think that just because it is bottled, it is safe. Safe, or take boiled water with you wherever you go. Small things make a big difference in ESG. Okay. I leave it to you. And so I'm just suggesting this as a matter of companies are also encouraged to bring plans like this by which the ESG will be maintained. Matter of time, don't worry. The cosmetic rules will come. You will learn that also. ESG reporting in board has to report ESG will come because the MCA will not be far off. And the next syllabus it will come. Don't worry. Next time exam, I hope none of you will write. I will be teaching ESG, special ESG reporting rules. MCA will not keep quiet. They will come out with ESG. They will also come out. And who will have to certify it? Auditor. So if anything and everything you want somebody to certify, only chartered accountant will certify. Whether I know it or not, certify, go to jail. That's all. Simple. You certify, you go to jail. Okay. So don't worry. When you come to NAFRA, I'll tell you more about how this continues. Okay. Of course, we have taken it, we as a profession have taken it very sportively. We have put in place a lot of checks and balances, and we have put in place a lot of self-review mechanisms, peer review mechanisms by which we satisfy that we are still capable of giving an independent review and an independent assessment and attestation. Our profession, we still maintain our dignity and independence in spite of all the attacks, in spite of all the burden which is placed on us. We manage to perform our job. So, company's policy on directors' appointment and remuneration. So, it is not as if directors can be appointed just like that. Whatever it is, there should be some review. State of company's affairs. In many cases, you should put sorry state of company affairs. but the way they project it will be as if the company will be. Development and implementation of risk management. So see, each one of these topics, my dear friend, is one day workshop. ESG one day workshop. Okay. Independence of directors one day workshop. I have conducted. Development and risk management. I have not conducted, but I have run that workshop in my training company with 3 professionals. Forex, foreign exchange risk, business risk, foreign exchange risk, collection risk. So many risks are there. Okay. So just a business risk itself, we have about 5 different kinds of risks. So today, a lot of external environmental risks are there. Inherent risk of the business is there. In addition to that, political risk, so on and so forth. So all that has to be information security breach risk, highest risk, so on risks are there. Details of fraud reported by auditors, if any. Comments by board and remarks made by the auditor and CSE. The auditor and company secretary in their respective reports would have qualified, would have made negative statements. The board has to give its comments in the directors. Amount carrying reserves are paid by your dividend. So that will be given. We have decided to transfer so much to reserves, or we are not transferring to reserve, you need not mention. Okay. Payment of dividend, if any, you have to mention. My suggestion, again, if I have told it earlier, I tell it once more with all due regards, is that please go through the annual report of a listed company once, from notice to end. Don't read it fully, scan it and make whatever comes to your mind, write it. You will find your knowledge improves. All this you'll find in real board report. Then you'll relate it better. Particulars of loans, guarantees, or investments given to group companies, etc., that has to be mentioned. Material change affecting on financial position. After the balance sheet date, if anything has happened, you have to report it. Okay. There are many other matters which are prescribed that also has to be given. See, where the listed or other public companies having paid up share capital of 25 crore or more. Listed companies, definite. Other public companies, unlisted, having paid up share capital of 25 crore or more, shall contain statement indicating the manner in which the annual evaluation of the performance of the board, etc., has been made. Committees, etc., has been made. So just like employees are performance is reviewed, board performance also has to be reviewed. Okay, in terms of, so that specialized agencies are there, and they will review the board. That also has to be disclosed in the board, how it was done. See, where disclosures have been included in the financial statement, such disclosures shall be referred to here instead of being repeated in the board's report. I told you now, where AS 18 already have given related party transaction, I need not again give here. I can say it's referred to that. Where the company's policy on directors' appointment, remuneration, and regarding CSR is made available on company's website, you could mention the website link, okay, and only give the salient features of the policy. Later on, when we come to CSR, we will find that certain companies are required to appoint CSR committee. The CSR committee has to formulate the CSR policy. This policy should be disclosed in the board report. But if it is disclosed in the company's website, then it is enough if you give salient features and ask them to refer to that. Where the complete policy will be available. They are trying to introduce an abridged board's report in some cases. The enabling section is there, 134.3a, but the format is yet to be approved. In case of an OPC, the report of the board of directors to be attached shall mean a report containing explanation or comments by the board on qualification made by the auditor. That's all. Other than that, think about it. Mr. A is the only member. He is also director. To whom he will give reports, sir? It will be a foolish, huh? Not foolish, funny. He will report to himself. Okay. While you are there, let me share with you something that I do every year. Every year I do this on the 31st of December. This year also, inshallah, I'll do it. On that day, invariably I try to travel with my family. I go either abroad or in India, somewhere in the hills or near the sea or wherever I can have a broad view of nature. And I sit there in my room, in the resort or in the hotel or in the ship. And in the morning, I start around 10:30 after breakfast. I start. For about 4 to 5 hours, I do this. I give a report to myself. That's what see, after all, last 365 days, I ran my life. I might have had certain criteria I placed on my life. Like this is how it should be. Now, I ask myself, did I achieve it? On various parameters, I do it. You can also try that. If you like it, you can try that. But it should be a little tough on yourself. If you are easygoing on yourself, then this exercise is meaningless. It should be very tough. First of all, you should have a framework on which you have to live this last 365 days. First of all, there should be a mission, a framework on which you should live. If the framework is not there, then on what are you going to test yourself? And then on that day, I sit with a notebook in the old framework, then achievement of this year, physically, financially, emotionally, intellectually, spiritually. So 5 matters. Physical, whether my health, what was the parameters, am I maintaining, or should I do something about it? Weight, obesity, I have to control. Other problems, anything. Am I controlling it? Am I maintaining my health, etc. Financially, some targets are fixed, whether I have achieved it in terms of my accumulated wealth, in terms of current income, whether these are achieved, whether all the avenues of revenue that I can earn, I have explored it fully, or am I functioning emotionally where I have matured? Am I controlling my anger, or is my anger totally gone? Am I being sensitive to other people? Am I listening deeply? These are all the questions. Intellectually, did I read minimum 100 books in this year? Did I acquire new knowledge? Did I acquire any new awareness about the world? Sorry, I'm boring you, but this is something that you as youngsters might find it interesting. And I'm now 60. And I continue to do this year on year. I've been doing it for 40 years. And I will continue to do it. I will never stop. In the year I die, maybe in that year I cannot do. Till that 31st December, before that, I don't have. Finally, I present an annual report to myself and then formulate the framework for the next 365 days. And life goes on. So the information, you can take it in the right spirit, I'll be much obliged. Don't mistake. Now, very, very important. However boring, you have to remember this. I will try to make it interesting for you, but you have to remember this. Some of you are asking what is important, what to read, sir, how many questions are. Those people listen to me. This is important. You have to remember it. Okay. So, director's responsibility statement. This is a statement which is contained in the board's report, wherein the directors have to confirm that they have done it. It is not assumed. They have to put it in writing so that tomorrow, if it is shown that the accounting standards have not been followed, directors are guilty. Okay. So they have to say the applicable accounting standards have been followed along with proper explanation. This means every director of a company should be aware of the accounting standards. If it's a listed company, then India is. They should be aware. They cannot delegate it to somebody because they are certifying that the applicable accounting standards have been followed along with proper explanation. Of course, the auditor will tell them, but still, they should also be aware. See, today a director cannot say, I'm uneducated. Uneducated directors, those days we had people who are not educated, but genius, financial genius. Today, those financial genius also have to become aware of all these things. Okay. The directors have selected such accounting policies and applied them consistently. See, one more thing, my dear friends. If you really look at the accounting standards, take away all the jargon, take away all the convoluted English, and go to the essence of the standard, you will find it is common sense. Basic common sense. All those long-winded words, all those convoluted, explanations and definitions. If you remove all that and reduce it to simple English, it will be common sense. Okay. What has been stated therein is common business sense. If it is not followed, it will be wrong. Sorry. So the applicable accounting standards have been followed along with proper explanations. The directors that selected such accounting policies and applied them consistently and made judgments and estimates that are responsible, reasonable, and prudent. That's why I said, why we cannot certify true and fair? Because estimates have been made. Many estimates are made. Apportionment of cost. See, when there are byproducts, costing of the byproduct is purely estimation. How the common costs are being shared. Estimate. Depreciation, estimate. Stock valuation, estimate. To an extent. To an extent, it is an estimate. Okay. So on and so forth. Okay. So estimates can be made, nothing wrong, but they should be reasonable and prudent so as to give a true and fair view of the state of affairs of the company at the end of the financial year and of the P&L for that period. So, you have to be, the directors have to clearly mention that they have selected and applied them consistently. So, if you go through the audit, the director's report, you'll find the same thing will come as a statement. The directors have selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent so as to give blah, blah, blah. Okay. The directors have taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this Act, for safeguarding the assets of the company and for preventing and detecting fraud. So the accounting system should take care of fraud, should keep in mind the possibility of a fraud. The directors have prepared the annual accounts on a going concern basis. So it is up to them to say whether it's going concern or not. Auditor cannot decide going concern. You tell. If you tell it is not going concern, then I will decide how to audit. The directors in the case of a listed company had a reason what is going concern, that the company would be capable of functioning as it is for a reasonably foreseeable future. would continue to earn profits, would continue to transact the business, would continue to carry on the business for which it has been formed for a reasonably foreseeable future. How do I know what they're going to do? The directors in the case of a listed company had laid down internal financial controls to be followed by the company, and that such internal financial controls were adequate and were operating effectively. This is told only for a listed company. For unlisted companies, no. Here, very specifically, they want listed company directors to mention this. Internal financial control is not the responsibility of the auditor. Directors only have to be responsible. By the time we come to see the books of account, nothing have happened. Everything is documented. Whatever you show me is what I believe happened. Did that really happen? Directors have devised proper systems to ensure compliance with the provisions of all applicable laws. Not only should the directors be familiar with the accounting standard, they should also be familiar with all applicable laws. Okay. And that such systems were adequate and operating effectively, which is why, see, the first alert on any legal compliance would come from the finance team. Some cases, ideally from the company secretary, but if the company secretary is not as intelligent as we hope he is, then the finance team has to tell. One of these fellows will tell, see, there is a law, you may be violating it. Then they have to get themselves educated. They have to get legal opinion if necessary. Okay. So this is very, very important, sir. These 6 items, please try to remember. They can even ask a theory question straight away, or they won't say, they will never ask you a question like this. What are the contents of the director's responsibility statement under the Companies Act? Rather, they would say, Mr. Bharat is the MD of so-and-so company. He has heard that there is something called director's responsibility statement. He wants you to tell him what it is, or he wants you to give him a report on it, something like that. This is basically theory, but it looks like a problem. Basically theory, wherein they want you to write the contents of the director's responsibility statement. 6 items you have to. I know this is pure theory. We have entered the pure theory part, so you are feeling bored. I can understand that. No, not many questions also in the chat, but if you have any doubts, you can feel free to ask at any time. Okay. The board's report will be signed by the chairman or 2 directors, out of which one shall be MD. Here, only the MD is signing with one more director. Okay. Company secretary is not signing. Chairperson is, if he is there, is signing. Or 2 directors, out of which one shall be MD. Okay. Accounts are signed by company secretary, financial statement, but board's report is signed only by directors. In case you contravene section 134, any of this, then fine. Company, 3 lakhs. Officer, including our friend the company secretary, 50,000. Because officer in default includes key managerial personnel. Okay. Which includes our friend, the company secretary. Why I say Hamara dost, because better keep him dost. Okay. I'm going to 136 straight away. 135 will cover later. Don't worry. CSR will cover later. 136. Some of you may not like the skipping. No, I'm not skipping. Don't think I'm skipping. It's easy to remember it this way. Okay. Right to members to copies of audited financial statement. Members are entitled to copies of audited financial statement. See, friends, today, if you want to get the financial statement of a company, you are not a member of that company, still you can. From the MCA site, you can download. Or if it is a listed company, once it is audited and laid before the AGM, it is available in the website of the company. From there, NSCA website, it will be there. SEBI website, it will be there. Moneycontrol.com, it will be there. It's easy to get listed company. Unlisted company, you can get from the MCA site, wherein you can download it. But it won't be in a printed format. It will be like how it was loaded. That will be downloaded by you. I have done it many times. But I'm a member of the company. I don't have to do all this. I can get it directly from the company. So members are entitled, and it is your duty to send copies of audited financial statement, consolidated financial statement, if any, audit report, plus all other documents should be sent, including board's report, should be sent to every member. Definitely you are entitled. Every trustee for debenture holders, other persons. Friends, nowadays, this is not sent for listed companies. Instead, the company puts it up in the website, sends you the notice to your registered email address. They give the link. You can go and download it. They give you the link from which you can download it. But if you still send a mail asking, they will send a link again. Every trustee for debenture holder is entitled. Certain other persons, including later on, you will see, auditor is entitled. Auditor is entitled. Okay, and so on and so forth. Circulation of financial statement, not less than 21 days before the meeting. In management and administration, you studied that the annual AGM ka notice should be sent 21 clear days before the meeting. Na? Similarly, your financial statement, etc., should also be sent to the members 21 clear days before the general meeting, so that you'll have time to prepare. Section 8 company, we already saw this as one of the exemptions when we discussed it. Section 8 company, the 21 days will be read as 14 days, not less than 14 days. Okay. Even for notice of AGM also 14 days. Okay. Section 8 company, there is a relaxation. Provided, always remember, if Section 8 company or government company wants to enjoy any of the exemptions, they should have filed the annual return and financial statement well within the due date. There should be no default in compliance, right? The financial statements are to be sent not less than 21 days before the date. Okay? If not, it is a violation, sir. Now, can I send the documents less than 21 days before the date of the meeting? Just like, shorter notice. Similarly, can I send the documents less than 21 days? Yes. Provided, if the copies are sent less than 21 days, they shall, notwithstanding that fact, even though they are sent less than 21 days, they shall be taken as validly sent, deemed to have been duly sent. So even though you are sending it less than 21 days, okay, still they can be taken as validly sent if it is agreed to by the requisite number of members, provided it is agreed to by the requisite number of members. In the case of company having share capital, majority in number entitled to vote representing not less than 95% in value of the paid up capital. Paid up capital, okay, not paid up equity capital. Majority in number entitled to vote, in which case only equity, that too having vote, right to vote, representing not less than 95% in value. Suppose those shares on which right to vote is there, if you take, majority in number should agree. The number of members having right to vote, majority in number should agree. Also, that majority number should be holding not less than 95% in value. Two conditions are to be satisfied at the same time. Company not having share capital. Members having not less than 95% of total voting power. Members having not less than 95%. Because here there is no share capital. So members having not less than. See, if there is no share capital, then one man, one vote. So 95%, one person, one vote. So total voting power is number of members. So 95% of the members should agree. Okay. Right? Please, now that nobody is giving any response, no questions, I'm getting worried whether at all you are all here or not. In fact, many faculty from an earlier generation are unable to take, online because they are worried about this. There's no fear. What do I do like that? Luckily for our generation, the 50 plusers, minus 60, I should say. Those who started teaching online before 60 years, we are comfortable. We have got used to that faceless audience. Just like we are used to a faceless assessment, we are used to a faceless audience. But I try to make it as interactive as possible by asking you questions. And you also are very kind enough to me by giving answers. Can you give answer for this? We will see your answer. Then we will. Not a question from the exam. No, question asked. This question asked in the exam. I have changed the name, but question asked in the exam. I'm waiting for at least one answer. One or two or five or six. We have some really smart people sitting there. Navneet Maurya, Mr. Linga. Kuldeep Nagar. I mean, just remembering names. Adil Shah. Navayuk Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is PUC, is rupees 50 lakhs, consisting of 5 lakh shares of rupees 10 each. Hello, nobody is giving any answer. Yeah, I'm going to cry. I will start crying if you don't give any answer. Am I audible? Are you even there? Hello? I hope Mr. Manoj has come. The WhatsApp link has been given in the group. Somebody is giving an answer. God is great. One or two more, yeah. Till then, I won't see the answers. So there was a delay in submission of accounts for audit, and hence signed financial statements are ready only on 10/9/2021. So the company has obtained the consent of 160 members who are holding 45 lakhs of PUC. Can they proceed to circulate the FS less than 21 days before the meeting? If you say yes, no, you have to give some reasoning. Anything is okay. Good. 4 people have answered. Now I will. So 45 lakhs is only 90%. Correct. Therefore, it is not valid. Correct. No. But see, my dear friends, Mr. Harsh Mishra is giving the answer like this. They can't proceed because 95% criteria not met. I think there is a better way of writing rather than saying 45%, whereas we need 95%, which is how much? 95%. See, 45 is only 90, whereas we need 95%, which we have not got. Less than 95. Adil Khan also says less than 95. Therefore, they cannot proceed. It is not sufficient if the number of members who have given their consent is a majority number. Here is a majority number. See, 50% is 100. Even 101 is majority number. But it is not enough if it is a majority number. Also, the members consenting should hold not less than or should represent not less than 95%. Whereas here it is 45 lakhs, which is only 90%. Therefore, the company cannot proceed to circulate the financial statements. See, the Pooja Bayalal has given correctly the answer, but that's the conclusion. Before that, you have to write the reasoning. Correct. Correct. She is given subsequently. Good shot. Good shot. In the case of a listed company, this provision 136 will be if the copies are available, made available for inspection at the registered office. See, today for listed companies coming under SEBI guideline, it is as if they put it in the website and give the link. Along with the AGM notice, now they'll give the link. Just have to go and get it. That's all. Also, they can give form AOC 3 and send it to the members. Okay. But in case the shareholder asks for the full, you have to send it. Okay. That's the plan. Correct. 49,50,000. But this is less. Correct. Priyarna is right. Absolutely correct. Linga, you're also correct. See, this examination is a written examination. Therefore, try to get some writing practice. I leave it to you. If you don't have writing practice, no, suddenly on the day of the exam, you can't develop it. 3 hours. Assuming some multiple choice is there, there's going to be some written part also. It is not entirely multiple choice. I don't think our institute will have that go through the disastrous experiment, which already the Institute of Company Secretary has tried and not been able to succeed. For 2 topics, the reverse there. Here for you, this subject law is non-core, not important, non-core. Core subjects are there. This is non-core. Ancillary, you can say. For them, accounts is ancillary and tax is ancillary. For you, it's core. So those 2 ancillary subjects that institute in the executive level, which is the equivalent of your intermediate, they gave it as complete MCQ. So that was there for about 10 sessions, 8 to 9 sessions, 10 sessions. And then they found that people who come through an MCQ mode generally display lesser knowledge of depth in the subject. People who have gone through an MCQ mode generally have the depth of knowledge in the subject is very low. Same thing with the other institute also, the cost accountants. They decided to abandon the methodology and go for written exams, where the student actually writes an answer pen on pen. What to do? So better be. MCQ is convenient, sir. We can, for evaluation, it is very convenient. Yeah. I totally appreciate that now you cannot do it, but you are a big man. You can write. I know. Okay. But here you are not able to do it because of phone. No problem. I can understand. Okay. Now, wherever you are, you can improve 3 levels above. Okay. Always think like that. Okay. The minute I think I am good at something, I am losing. The minute I keep on thinking, I should improve, I keep on growing. Man talking to you 60 years, and I'm not giving you advice. I'm stating what I do. I am not perfect. My knowledge is not enough. I have to learn. I don't know enough. That fear I will always have. And I'm 60. Okay. But I've cleared the exam, blah, blah, blah. But that The minute I say, I know, God, be careful. Don't ever say, I can. God can. I am an instrument. Be an instrument. Instrument is never perfect. The instrument has to keep on making itself perfect and dedicate itself to the Lord. Then automatically, everything that you do, if you dedicate to Him, no perfection comes automatically. Only when you say, I am doing, everything gone. Chalo. Now, beautiful. Just get some writing practice. That's all I'm telling. Nothing else. You're all great. You're all absolutely extraordinarily brilliant. I totally agree. Little bit more practice. Write out answers. See your handwriting, how it is. Check it out. If you think it is important. Write to members to copies of audited financial. We already seen. Also, there are boring stuff here, but what to do? We have to cover it. But not important from exam point of view. Whereas, my dear friends, very, very important. Don't say I didn't tell you. 6 points. Remember it. Company shall allow every member to inspect the documents. So this is one of the inspectable documents. Okay. So where the company is having subsidiary, it should provide copy of separate audited. In addition to CFS, the subsidiary accounts also you have to give for each subsidiary to any member of the company. See here, the company means the holding company. So holding company ka member is entitled to the accounts of a financial statement of a subsidiary. Okay. How to circulate? All listed companies and such companies which have a net worth of more than 1 crore rupees and turnover of more than 10 crore. Your honors will please note, and means both the conditions are to be satisfied. Net worth 1 crore and turnover of more than 10 crore. Then question, are the shares held in dematerialized form? Yes. Then it is enough if you circulate financial statement in electronic mode. No. Then you have to sell in electronic mode if consent is received. And in case consent is not there, dispatch. But today, all unlisted company also has to have shares in dematerialized form. Compulsory. So the shareholder cannot ask for physical documents anymore. He has to open a DP account, get his shares converted into dematerialized form, dematerialize it, hold it in dematerialized form, and he will get it in his registered email address by electronic mode. Okay. This is how it should be done. Once again, I have a doubt whether any one topic was covered or not. Maybe I hid it and I let it go. Sorry. There is one. Reopening. Okay. So it's going to come. It's going to come. Sorry. Okay. So we are here. Okay. So dematerialized form. Fantastic. Now, fairly simple topic. There's nothing great. As usual, non-compliance with 136, company penalty of 25,000 and officer penalty of 5,000. Now, very important, when you are in management and administration, I think 94, you would have talked about annual report and filing of annual report within 60 days. Similarly, the financial statement also has to be compulsorily filed with the registrar. Friends, this is very, very, very important. Non-compliance with this huge penalty. Penalty means additional fee, huge additional fee. If for 2 years, and later on when you come to final, one of the grounds for disqualification of directors, where a company does not file the annual return and balance sheet financial statement for 3 consecutive financial years, the directors will be disqualified from being appointed as a director of any other company. It's one of the disqualifications. Okay. Therefore, you have to be very, very careful. Every year, as a matter of routine, you have to file it. Now, certain possibilities are there. First of all, sir, Tobacco Limited did not hold its AGM itself. See, Infosys Limited will hold AGM, yeah. All companies which are having corporate governance. I use the word actually, that's a word that means fraud. So instead of saying that, I can say fraudulent limited. Sometimes in exam, they have such names, yeah. Unscrupulous, Mr. Unscrupulous, name of a person. Okay, fraudulent fly-by-night operators was one of the name of a company in the problem asked in the exam. Fly-by-night operators. Fly-by-night means what? They will run away. So like that, I'm using the word Tobacco Limited. Okay. Idea is these are companies formed for the purpose of cheating the public. Today, thanks to the shall we say, a boom in the stock markets, many companies are coming out for IPO. Okay, some of these companies are not worth the price which they are charging for their shares. But given adopted means, I'll come to that. I'll explain it. Navneetji, I'll explain it. Adopted. Aram say, yaar, I will explain. Don't worry. I will not run away without explaining. This slide will be explained. Before that word Dubakur, sometimes I'm using, you might know what it is. It means fraud. That's all, nothing else. Okay. It is not a Tamil word. It is not a Hindi word. It is, I think, Urdu word. Something like that. Some word must have some origin, some etymology must be there for such a word. But we use it in certain parts of South India where to describe a person who is fraudulent, whose intentions are defrauding. Such people are called, he's a Dubakur person, sir, like that. Dubakur. I don't know what it means. Okay, you don't ask me. It's not Tamil. Definitely, it is not pure Tamil. So, though we use it in Tamil Nadu, it is not Tamil. Okay. I don't think such a word was used in Sangam literature ever. Okay. Though the word inna has been used, which is used commonly in South. When you come to Madras, even the auto driver will say inna like that. That is used by Thiruvalluvar in Tirukkural. It's a very famous Sangam word used in inna Sedare Uruttal like that. So that word is used in Sangam literature. But Dubakur is not used anywhere in Sangam literature or anything. It is used frequently in Tamil Nadu nowadays. So, and it is practiced regularly. That is different. All over the country, not only in Tamil Nadu. Fraud is practiced all over the country. Okay. Fraudulent companies are formed every day. Fraudulent individuals are there. I don't have to tell you. Why, you might ask me, why are you talking about fraud, sir? I have to, because we are going to get into NAFRA very shortly. And we have to talk about one of the greatest fraud ever happened in the country. Memorable fraud. Okay. Which by the great one, Mr. Ramalinga Raju. Okay. So without talking about fraud, I cannot teach you auditing. Because most of the provisions of the Companies Act in 2013, they are stringent about auditors because of that one Satyam scam. But for one Satyam scam, all auditors have been picturized as you are all frauds like that. So in order to control us, so many sections are introduced, so many checks and balances are there. Therefore, we have to talk about fraud. And we have to talk about fraudulent directors and how they behave. Of course, fraudulent auditors are there who support these fraudulent directors. But the beginning is the fraudulent director, the fraud who decides to use the company form of organization to cheat the public. Such companies may not even hold AGM. They will not be accountable. Okay. But what they are trying to say is, whether AGM is held or not, you have to file the financial statement. Note it, Your Honors, whether AGM is held or not, the financial statement has to be filed. So let us look at the options. First, good option, decent company. It holds the AGM. Means the annual general meeting is held. Now, Navneet wants to know what is adopted. I will explain. Yeah, simply why are you typing Satyam computer scam? I will explain to you, don't worry. Tobacco means to drowning. I don't know what it is. Okay. I don't know, yeah. Just using the word. No problem. I use it in the meaning, the meaning I use it is fraud. Person who commits fraud, or a company that commits fraud, intention to commit fraud. Intention to, these words you will find in the Companies Act. The companies, the management of the company is with intent to defraud its creditors, members, creditors, or any other person. That's all tobacco behavior. Okay. So, AGM is held. Now, at the AGM, there are 4 matters which are ordinary business. What are they? Adoption of the accounts. What do you mean by adoption? Sir, the board of directors have got the accounts audited, sir. And then they bring it and lay it before the members, sir. Now it is the job of the members to either accept it or reject it. When the members accept the accounts are said to be adopted. So he will put it to vote. After all the questions have been raised by all the members, etc., auditor and MD and finance director have answered it, everything over, then they'll be on silence. Then again, chairman will ask, chairman of the AGM will ask, does any other member want to raise any other question? Like that. Everybody waiting. Okay, what to do? All over. Then the chairman will put it to vote. I propose that the financial statements of the company as tabled or as laid before this meeting be adopted. Be adopted. All those in favor, some people will raise the hand. All those against, nobody will raise the hand. That's all. So adopted. That means majority of the shareholders have accepted the audited financial statement, the auditor, director's report, auditor's report, and passed it. So in a way, adopted means passed in general meeting. The resolution for adopting them has been passed. Have you understood, Mr. Maurya, what is the meaning of the word adopted? So that means what the members have accepted. Then no problem. Within 30 days of the date of AGM, file it. What is preventing you? File it. Suppose the accounts are so wrong or the members are so unhappy, they decide not to adopt it. The chairman puts it to vote. All those in favor, nobody. Anyone to the contra, 10 people raise the hand. Accounts are not adopted, sir. What I can do, I can adjourn it. The chairman says, okay, go home, think carefully and come back. We'll adjourn it to the same time, same day, same place, next week or some other day, whatever. Adjourn. Go. But in the meantime, the provisional financial statement should be filed within 30 days. Ladies and gentlemen, please note it. Even if it is not adopted, the AGM is adjourned, no problem. You have to file the unadopted financial statement within 30 days. The registrar takes them as provisional. Then in the adjourned meeting, maybe it is adopted, then that can be filed within 30 days of the state meeting. In spite of that, you have to file the unadopted accounts within 30 days. Now, somebody may argue, sir, it says only 30 days of date of AGM. No, sir. So if I don't hold AGM, what happens? So if the AGM is not held, they don't say 30 days of date of AGM. They say where the AGM is held within 30 days, where no AGM is held, then within 30 days of the last date before which the AGM should have been held. Invariably, it will be 30th September because 6 months from the date of the end of the financial year. 6 months from the end of the financial year, you have to hold the AGM. That is the last date before which the AGM, on which the AGM can be held. From that day, within 30 days, you have to file the financial statement together with the statement, facts and reasons for not holding. So it should be audited, but it won't be adopted. AGM itself not held, etc. You have to file with ROC. So what is the unerring conclusion I get from this slide? Whether the accounts are adopted or not, whether AGM is held or not, within 30 days, the financial statement has to be filed with the registrar. If it is unadopted, then it is taken as provisional. Later you adopt it, file. Otherwise, if it is AGM itself is not held, then within 30 days of the last date before which AGM should have been held, with the reasons for not holding AGM. So this is the framework. Of course, this is the only correct method, sir. Any other method, they are given an option. But if you try any of this, 100% investigation will come. If you file unadopted accounts, if you say, no, AGM is not held because we have a problem with the members. After all, those idiots gave the money, why I should bother about them? Let them go to hell like that. No, if you tell, next day the registrar will come for investigation and the company will be dissolved, winding up and dissolved. So better not get into all that. Properly hold your AGM, give proper explanations, maintain books of account correctly, run the company in a decent manner, get the accounts adopted by the members, file it within 30 days, live peacefully. This is the conclusion we have to arrive out of this. Don't please think that the options of not holding, not adopting are all good. They will give a very bad impression about the company and its state of affairs. Okay, thank you for giving me. Oh, okay, drawing money in water. Oh, okay, thank you. That I got it. Paisa dubane wala. Okay. Dubakor. Thank you for the etymological clarification given to me. What is 30th October, Mr. Kuldeep Nagar? Sir, can you elaborate that comment given by you, 30th October? 30th September, because the financial year ends on 31st March now. So April, May, June, July, August, September. So on 30th, by 30th September, you should hold AGM. Okay, of course, if you have studied management administration, you can take time for holding 3 months and all, you can extend it. Agreed. But all that you do, just simply if you don't hold it at all, then on the expiry of 30th September, within 30 days, you have to file. What happens now? Non-filing automatically makes huge offense. And for additional fees there. Sometimes some company directors come to me and say, Mr. Srikanth, we have not filed the annual return for the last 3 years for this company. I now want to revive it. Can we do something? Yeah, we can. We can go and file all those papers, get it audited, get it adopted in one AGM. But the final fee will be huge. It will not be worth it. What to do? The only way is wait for amnesty scheme. Occasionally, they come out with amnesty schemes when they give you some lower fee. Pay, file all these documents, close the company. They give you a chance to close off defunct companies. In the amnesty scheme, you have to go. Yeah, 31st October, na? 30 days, correct. Sorry, you are right, sir. You are absolutely correct. But don't, 30th October, absolutely correct. But then please don't, I'm giving one example. If it is 30th September, then it is 30th October. Shall I put it that way? If it is 30th September, then it is 30th October. That because sometimes, like Corona and all, during Corona period, they extended the period for holding AGM itself by circular during Corona period. So in those cases, 30 days from the last date, which is given as per the circular. Okay. So that is why I'm being very careful. If it is 31st March, then 30th September, then 30th October. You have to be very careful in legal topics. Because sometimes you have to be very careful in law. The way you speak, the way you write. While talking to friends or while talking casually, we can talk. But once you put it in writing, legally, that is why sometimes some people, generally I like to talk and finish off. Some people will talk very smartly and say, Mr. Srikanth, some complicated issue will be there. I'll tell him. Once we will talk, finalize, then we will have. No, Srikanth, don't waste my time. Send a mail. I'll tell him, please note what you're telling. You are asking me for a mail. Yeah, write a mail. Many multinational companies now, they have this attitude. Everything mail, mail, mail. So my mail will go. After I analyze the whole thing clearly and write everything and put it and send it now, he'll call. Sir, I saw your mail. What to do? I said, look here. I told you I'll come in person, explain to you the whole matter. Then I put mail. You only wanted mail. Now what to do? You only wanted mail. Take it. Now you give reply. No, you give reply now. No, what reply to give? What reply to give? No, you only arrogantly told send a mail. Now here I've sent a mail. My mail is it will extract everything and leave nothing. He cannot give a reply. Don't think that I'm boasting, but sometimes when people ask me for, in fact, when somebody asks me for a mail, my manager will laugh. Sir, please don't ask him for a mail, sir. As far as possible, talk and solve your problem. Because the minute he sends a mail, it is like Ramar's arrow, Ramabhanam. That is the end of it for you. Thereafter, I cannot take it back. Once I send it, you're out. I'm an auditor. I'm still telling, let's talk, decide, then I will send a mail. If you still say send a mail, I'll send a mail. In fact, many issues and disputes, no, after my mail has gone, nobody will have the guts to send a reply because I'm not boasting. I use the language so carefully and so clearly that he cannot reply. Try to develop that skill so that once you send a mail, there should be no response mail, only compliance or surrender. And tell me what to do next time, please. Folded arms, the man should come. Like Ramabhanam, man should surrender or obey. I know this is a little too much, but think about what I'm saying. Because if only you can develop your writing skills to that level now, no, thereafter your mail will be the last word on that. Yeah, this is a fantastic question asked in the examination. It sort of combines government company and audit and all that. So the government of India is holding 51% of the paid-up equity share capital of Sun Limited. The audited financial statements of Sun Limited for the year 2021 were placed at its AGM held on 31st August 2021. See, placed at the AGM, laid at the AGM, all are the same. However, pending the comments of the Comptroller and Auditor General of India, the CAG, the said accounts, the meeting was adjourned without adoption of the accounts. On receipt of CAG comments on the accounts, the adjourned AGM was held on 15th October 2021, whereas the accounts were adopted. Thereafter, Sun Limited filed its financial statements relevant to the financial year 2021 with the Registrar of Companies on 12th November 2021. Examined with reference to the applicable provisions, whether Sun Limited has complied with the statutory requirement. I will love to have your answers before we go for the correct answer. See, this is nothing but this slide. Nothing but that slide. See, this government company thing is only to give a reason why the accounts could not be adopted on such and such a day. Because, see, a government company AGM, there will not be many people. 51% is held by the government of India. Rest of it, maybe shareholders will be there. So, at the AGM, the representative of the President of India will come. The President of India will be holding 51%. Yeah. He will send his representative. The rest of the shareholders, maybe other joint venture company, they will send one person. That's all. But they can't do anything unless CAG has given the comments. So the CFO will come and say, sir, it is like this, sir, it is like MD will also be there. The MD will be an IAS officer. MD won't be owner MD, not like Mukesh Ambani. MD will be a highly paid IAS officer, under secretary or secretary. and he will be there and he will explain, sir, CAG comment has not come, sir, auditor has audited, CAG is still on it, what to do, what to do, what to do. Okay, sir, we'll adjourn it, sir. So the adjourn will hold, sir. By then CAG comment will come, sir. Okay, thank you, bye. So all of them go back. Then again they come on 15th October and they adopt. And well within 30 days, on 12th November, it is filed. For all government company, should they not be exempted? Right. Complied. Adil Khan says complied. Tanu says Sun Limited need to file its unadopted. As meeting is adjourned, AGM held on 15th October, then it should be filed within 30 days of AGM. Hence, it is 15th November. Hence, Sun is complied. Friends, I'm so happy for all of you. Let's have a look at this. See, where it is not adopted, within 30 days of AGM, you have to file the unadopted accounts. I mentioned it. Within 30 days of the original AGM, the unadopted accounts will be filed as provisional. Then later, when it is adopted, you have to file within 30 days. Are you able to understand? 2 stages. Unadopted. Then that unadopted to be filed within 30 days of AGM. You can't say, when I adopt it, I'll file. Unadopted will be filed. The registrar takes them as provisional. You put a covering letter also. The CAG has not given the, therefore. And then adjourn meeting. Then again within 30 days, you file the adopted accounts. Okay. Correct. Prerna gives the right view. Let me see. Okay. So the Sun Limited has not complied with the statutory requirement regarding filing of unadopted accounts, but has certainly complied with the provisions by filing of adopted accounts. But to the extent that it has not filed unadopted accounts, there is a non-compliance with the law. Okay. That is how I have to understand this section. Correct. First, you have to file unadopted, not adopted, adopted. First, you have to file unadopted accounts. Then I know you are having a mobile phone, so you are not able to type correctly. So, correct. First, there is one due date, which is, see, 31st August now. So, within 30 days, right? 30th September, rather 29th September, I would say, 30 days. Count 30 days from 1st September, 30th September. So, 30th September, you should have, before 30th September, you should have filed your unadopted accounts. Then adjourn meeting. Then within 30 days, you file your adopted accounts. That is the correct procedure. Correct. What to do? See, that is how the law is. I'm not here to, I didn't write the law. I only teach it. Don't get angry with me. Correct. Also remember, even if the AGM is not held, you have to file it within 30 days of the last date before which the AGM should have been held. Okay. This is something called extensible business reporting language. Long ago, it was introduced, XBRL. This only MCA and company secretaries are aware of this language. I am not aware of this language, how it is written, how it is done. One thing I know is that once accounts are coded in this XBRL, it will be easy to collect and collate data for research and all that. So they have made it compulsory. Certain companies have to compulsorily upload their statement in XBRL format. Okay. Extensible business reporting language, something is there. Yeah, at the time of uploading itself, they will code it and enter it in some way. that's some coding and all. It's a language, extended business reporting language. I don't know whether anybody uses it. The idea is that it is meant for researchers. I do a lot of research. I don't use XBRL and all. I download the PDF document and I take the actual information from the, the idea is maybe now with so much AI and all that, that AI can be taught XBRL. And maybe that AI can go and get all this XBRL based information and give me some meaning. I don't know. But I prefer to still download that annual report and read and take out the information. Anyway, idea is machine sensitivity so that automatic search, you can search across industry and collect data using XBRL. That was the claim made at the time when it was introduced. As of now, there is a Rule 3 that makes it compulsory for these companies. Companies listed with stock exchanges, listed company, everything they have to comply. Nothing is exempted for them. Companies having paid up capital of 5 crore rupees or above. Out of the 600 files, I have about 300 corporates. Out of the 300 corporates, 2 are listed and about 60, 70 are quite big. In all that, paid up capital 5 crore, only 5 are there. Out of that, the 2 listed are there anyway. So these are all XBRL cases. So the company secretary will come, sir, these are all XBRL cases. Okay, what to do? No, I will have to convert it into XBRL. Do it. Go. No, there will be a fees for that. Charge. Go. That's all. Beyond this, there is nothing for me there, for you and I. Okay. Just we have to know that listed companies having paid up capital of 5 crore rupees or above, companies having turnover of 100 crore rupees or above, pretty high. All either this is all or. If you're having doubt whether all these conditions are to be satisfied together, no. This is or. I'm sorry. There's see, if nothing is mentioned, read or. Friends, if a list of criteria is given and nothing is mentioned and is not there, then the assumption in the absence of any conjunction or disjunction, you should always assume or. You should not assume and. I will repeat. See, in this case, there is no or and. So, should I take it as or as and? Sorry. Humble submission to you. If nothing is mentioned, you can assume it as or. Not as and. Okay. So, either the company is having a paid up capital of 5 crore or the company is having a turnover of 100 crore or all companies which are required to prepare their financial statements in accordance with Ind AS. So if Ind AS is applicable to you, then XBRL automatically applicable. Quite big companies only will be coming in this category. Okay. So companies which have filed their financial statement in XBRL shall continue to file their financial statements and other documents, though they may not fall under this class again. If the turnover goes down or whatever happens, once in XBRL, not in XBRL, you cannot get out. Okay. What is XBRL? I do not know. I never learned. At one stage, it was a hot topic. Many company secretaries were conducting classes all over the country. I never attended. I said, what will happen if I don't know? I said, nothing will happen. Both have different implications. No special provision for government companies, sir. Nothing. In this case, no exemption for government companies. For that filing of unadopted accounts, no? For this, no exemption for government company. Okay. XBRL. In case of one-person company, the financial statement has to be filed within 180 days from the closure of the financial. 180 days, quite a lot of time. 6 months. Remember, OPC alone, 180 days. Okay. In case you are a company which having subsidiary in a country other than India, there is no audit requirement. So unaudited. unaudited. In that country, no audit. They go, they run naked. Very good. Let them be great. We don't know which country because most countries audit is there. Some kind of an audit is there, some kind of an address function, some kind of an equivalent of our profession should be there. But some countries there where there's no auditing, nothing, enjoy, go do whatever you want, do business in my country, do whatever you want, I don't care. Like that, countries could be there, small countries. I don't know. Maybe even those countries, some auditing will be there, something will be there, na? But let us assume unaudited. Then you have to file in India in a format similar to the format given in Companies Act. Okay. In case the financial statement is not in English, then you have to file with the translated copy. This is for foreign subsidiary in a country where it is unaudited. I am unable to think of any country was offline. Check out why you do research, which are go to AI, Google Gemini or ChatGPT. List of countries in which financial statement need not be. Why I can do that now, na? Let us see. Seriously. Seriously, na? Why not? Let me see. What are the countries? Countries where I'm on Google Gemini prompt. Even you can try that. Google Gemini prompt. What are the countries where there is no requirement for audit of accounts? Let's see what our friend the AI will tell. See, seriously, in general, no country completely, I'm reading from AI report. In general, no country completely lacks audit requirements of all accounts. Audits are mandatory for company. However, most countries have exemptions for smaller businesses. For example, in EU, there is a exemption for small company not getting audited like that. Malaysia also, mostly they are exempted, like dormant company, zero revenue company, like that. Okay. Vietnam also, but some exemptions are there. Okay. So no country, as per AI, no country has unaudited, but there are certain classes of companies that are exempted from audit. Okay. In India, no exemption. All companies have to get their accounts audited. No exemption. If it is company incorporated in the Companies Act, it is to be audited. Okay. Maybe India also, in the spirit of becoming a part of the, superpowers, we should also give some exemptions to certain companies. Thereby, auditors will lose audits. Nice idea, no? Don't give it to the CG. Just they're waiting, MC is waiting. Yes, we'll exempt. No OPC, no need for audit. Small company, no need. That means major, my entire client will go out because most of them are small companies. Anyway, see, even if there is no need for auditing under the Companies Act, there will be other audits. Yeah, other departments will want us to certify. It's not so easy. Okay. So better the Companies Act continues to have audit. Sometimes they will threaten us by saying, if we remove this section, what will happen? Auditors, practicing chartered accountants will simply have to beg on the streets like that. Don't worry, we will not beg anywhere. We perform a very important role in society, and that role will continue to be played by accountants. We give a certain degree of assurance to the public about financial statements. Whether statutorily required or otherwise, this assurance will be required by people. And to that extent, a profession such as ours would have a meaning to exist. So it's not only because of the statute that they exist. Company, if in case you do not comply with 137, non-filing of financial statement, fine of 10,000 rupees. And in case of continuing failure, further penalty of 100 rupees for each day during which such failure continues, subject to a maximum of 2 lakh rupees. So very steep penalties, sir. Very steep penalty. Once you don't file for 3 years and you go there, the number will come in lakhs, huge lakhs. And fine of 10,000 rupees. And for continuing failure, further penalty of 100 rupees. Okay. up to a maximum of 50,000 rupees. So sometimes the company will come and ask, sir, what is the Srikant, tell me one amount. Hey, wait, let me revive this. Then we'll compute everything and give him the number. Sir, about are you ready to pay about 7.5, 8 lakhs? 8 lakhs. Why? That is the fee. 4 years, 5 years, you have not filed. Plus disqualification of director, condonation. So much is there. Anyway, before we go to reopening, let me take a small break. Then we'll go for reopening. No. Hello, brother. You compute for 4 years, you will know. Fine is 10,000 rupees. Continuing failure is there now. Maximum 2 lakh now. That for 3 years, it will become 6 lakhs. Okay. And that to remember, they are trying to revive a defunct company. See, running company will file it properly. It's only the defunct company will not file, or rather, companies that are not, suddenly they will want to revive it. And they'll come to us and say, we want to revive it, how much to pay? Even if they have not done it for 3 years, straight away 6 lakhs. Continuing failure, na? 200, 100 rupees for each day. Okay, so it'll go. That too, some of them will not file for 5 years, 6 years, then they'll come. Agreed. Check it out, because I have found many people who wanted to revive the company. Once they heard the fees, they will run away. Anyway, if they want to revive, I'm happy. Then I get one more audit. What is that? If you think the fee is less, I'll be very happy. Eight. For all you're paying to the government of India, not to me. Anyway, so a small break for about 5 minutes. Sir, small break, sir. welcome back from your well-deserved break. Let's continue with our discussions. Now we move on to a topic that's very peculiarly introduced by the 2013 law. It was not there in the 1956 law. These two sections, 130 and 131. So those of you who were worried, this fellow is skipping from 129, suddenly he jumped to 134. Then suddenly he goes to 136. Like that, those of you who are getting angry with me, suddenly he goes to 137, like that. Now, don't worry. Now I'm coming back to 130. So these two topics are peculiarly introduced by the 2013 law. To understand why these two sections for reopening and revision were introduced, first we'll talk about reopening. See, once accounts have been prepared, audited, adopted, that's it. How can they be revisited? So normally the accounts of a company shall not be reopened, revised or recast once it is laid at an AGM and approved by members. Normally, no, impossible, get out. But Satyam gave a huge problem because Satyam scam happened under the old law. Satyam scam gave a lessons which were implemented in the new law. So when Satyam scam happened, many of you would have heard of Satyam scam like that. But to my knowledge, the average Indian doesn't know what happened. One thing they know, auditor fraud. That has been brainwashed. Other than that, what did Ramalinga Raju do? Why he did it? Nobody knows, nobody wants to know. Auditors are frauds. That much they, what fraud? What happened? You tell. Do you know what happened in Satyam? I will explain to you in simple terms. You can definitely read it in Google, but you have to do real research because much of the reporting, much of the at the first 2-level depth now you'll find nothing. Nobody knows. So Satyam is like an elephant. Everybody, one fellow says it is like a trunk, other fellow touches the tail and says it is a rope, like that. Nobody knows the reality of whole Satyam. Okay. Of course, nobody has done any research, and see, in US, minimum 5 books would have been written on Satyam. In India, nobody wrote the reality. Nobody wrote the reality. I don't know why. Okay, because nobody's interested in reading. See, in the US, there are people who are interested in learning the real stories and the truth. In India, nobody wants the truth. They want only that one Instagram message, one WhatsApp message. Everything should become simplified and given in one WhatsApp screen. One message, if I cannot tell it, but Satyam story cannot be told like that. It is complicated. See, Ramalinga Raju had taken private funding, equity funding from PE funders. Huge amount had been taken. Also, he had given certain IRR guidance. So those people who invested in this company, they were hoping that when the price goes to a certain level, they will sell and come out. That is the IRR for them. The internal rate of return from the day they invested, dividend received from Satyam. Finally, when they exited, the total, when they see the cash flows and they discount it, that IRR, they would have. Now, that means Satyam's price should keep going on a certain targeted manner. The price of Satyam in the market cannot go down. Now, by and large, even with foolish people running the market, even with idiots running the market, somewhere there is a link between the price of a company share and its profitability. Okay. Now, in another 1 to 2 years' time, even that logic is going to be destroyed. In the next 2 years, till 2027, madly people are going to buy in shares without bothering about profitability. But that is in the fag end of a boom. When recklessly people will buy, they will give justification for buying shares of companies which are not making profit. All that is going to come. But still, good profitable companies would still command a good premium. And in case the market collapses, these companies would still maintain a certain they'll be less volatile than the rest. So there is some link between profitability and marketplace. Therefore, there was a pressure on Mr. Ramalinga Raju to show a certain profitability, which Satyam was not earning. Satyam Computers was not earning that. Please listen to this story. It's a very important story for future chartered accountants, for current chartered accountants also, members of this road also, because easy to forget. Satyam's story, if it is forgotten, our profession will lose, because we should again and again understand what happened. So one-off situation. Satyam cannot happen every time. Another Satyam, it cannot happen. I'll tell you why. So Ramalinga Raju was under heavy pressure. What he did, cool. He called some of his core team. Obviously, Ramalinga Raju himself cannot have gone on that. So there is collusively, CFO is definitely involved, companies are definitely involved, etc., etc. So what he told them, you recast my accounts, you prepare in such a way that we show profit. They will say, sir, how to do that, sir? This is what it is. No. You increase the billing, raise bogus bills. So that is where it all begins. P&L account, income side, boosted. Please understand, you are chartered accountant students, you are all experts in accounting. Please remember, double entry system of bookkeeping. Satyam is not exempted from double entry. So when I increase the revenue, credit side gone up. Debit, what I will do? That sheet won't tally pass. So profit will be there. This sales will trickle down as net operating margin, and it will come down as PAT. That PAT will go to my profit, my reserves. So reserve side will go up suddenly. But on the asset side, nothing. I'll come to one quotation also given by our famous late lamented Padma Shri T. N. Manohar, and I'll come to that. Now the point is, right, so what to do? So we create bogus expense also. So what they did, which is the major expense of a software company, employee cost. So we put bogus employee, bogus PF, bogus ESA, bogus cost. So finally, the profit was managed in such a way that IRR was maintained. So they gave enough profit and enough guidance for Satyam to get a certain price in the marketplace. Got it? And based on that, this is 2009, nearing 2004-5. Okay. Now, post-global financial meltdown, that is also there. And so it's coming. And at one point in time, they are boosting the cost. Sales boosted, cost boosted, P&L tallied. But P&L mein bogus profit hai na? That bogus profit is sitting in the balance sheet. Against that, there is nothing in the asset side. On the liability side, share capital, shareholders funds, reserves and P&L account balance superbly gone up. Wow. But correspondingly, nothing in the asset side. Because that money is not there. No money. With real money has not come. They have simply cooked up the books. And then on the reverse, on the other side, what I did, I put bogus fixed deposits. Bogus fixed deposits. Fixed deposits are shown. Now, how the auditors audited it, how they certified it, I will leave it. I won't go there at all. Rather, I'm more worried about subsequently when Ramalinga Raju's efforts to, somehow come to terms with his miserable life went out of focus. So finally, he had nothing to do but to send that great, letter to the SEBI. There's one letter sent by Ramalinga Raju to SEBI. It must be there on Google somewhere. Just see it. Wherein he said, I have done fraud. That's all. And he simply went off. Automatically, the price of Satyam share fell. So many people were affected. And the auditors that certified these balance sheets, these bogus balance sheets, all that. So those balance sheets were laid before the AGMs. The whole structure is now gone. The real turnover is far lower. The real profit is far lower. Now, forget fraud, forget punishing Ramalinga Raju, auditor. That comes later. Right now, I'm in a different problem. Yeah, the accounts are wrong. I have to revise it now. I have to recast it. But there is no provision in the Companies Act. Now, are you able to connect it with this section? There was no provision in the old law for reopening of the accounts and recasting and revising. So they said, so that learning, so in future, if there is one more Satyam, at least let this section be there. There, what they did was the central government passed an order. The central government specific to Satyam, they passed a GO. They said, after the investigation, they said accounts be recasted, re-audited, and re-approved by the members as a specific relief. Now they have given a general section. Any company can get an order for reopening. Okay. I'm sorry. Yes. This is, first we'll see this. Under what circumstances can an order for reopening be done? First of all, the application has to be made. Not the company. Company cannot apply. Company has no business to apply. Only central government can apply. SEBI can apply. IT authorities can apply. Statutory or regulatory body can apply. Any other person concerned, including shareholders association or investor association, can go. They have to make an application to the court or tribunal, as the case may be. In case the court is apprised of the matter, the court, otherwise the tribunal. Now, the court or tribunal will go through it, give the company an opportunity. Then finally, the court will come to a conclusion. See, this is where Satyam link is there. That is why this section is there. Because the accounts of Satyam were prepared in a fraudulent manner. So, the relevant earlier accounts were prepared in fraudulent manner. So, the court or tribunal should come to the conclusion that the earlier accounts were prepared in a fraudulent manner. And the affairs of the company were mismanaged, casting a doubt on reliability of accounts. Now are able to see clearly Satyam is the target here. Because of Satyam only. Where the affairs of the company were mismanaged by the great Mr. Ramalinga Raju, casting a doubt on the reliability of the accounts. What a shame on the audit firm, na? The reliability of accounts have been questioned. Even assuming that they were not aware of the fraud, as the Andhra Pradesh High Court finally acquitted the member, is still, it's a gross negligence. Na? Such a obvious fraud has been perpetrated. How he perpetrated is a bigger story. See how he was able to get bogus FD. He didn't get. Which bank will give bogus FD certificate? No. Rather, he had control over the bank software itself. Na? See how independence, they are talking about independence of auditors. Here is the independence of a software developer. The ethics of a software developer. What he did, because he had control over the bank's software, he created bogus FD. That the auditors fully believed, oh, thank you. Should you not have asked for a confirmation from the bank? I mean, anyway, I'm not trying to find fault with that. I'm saying whatever happened, everybody knew. Okay. Without knowledge, nothing happened. Okay. It was like that. Anyway, no. So that is why you'll find when you come to auditing, you'll find even for control is there. Our entire profession has come onto the when one man stood accused, the entire profession stood accused there. And every one of us stood up and were accused by the public. All of us hung our head in shame because of one man's greed and one man's need. The entire profession hung its head in shame. But thankfully, our great past president, late lamented Padma Shri T. N. Manoharan, ensured that he acquitted all of us. And on behalf of the profession, he revived Satyam. And he, sort of ensured that the employees of Satyam were not affected, public at large were not affected, though the shareholders of Satyam lost everything. That is gone. That is because, along with Ramalinga Raju, we also lost everything. But Ramalinga Raju, whether he lost, God only knows. Now the point here is, but thanks to Padma Shri T. N. Manoharan. Padma Shri T. N. Manoharan and C.A.V. Pattabhiram have written a book, Tech Phoenix. It's a famous book written by our own past president. I strongly recommend that you read it. Even if you normally do not have a habit of reading books, etc., which you think are unnecessarily, when WhatsApp is there, Instagram is there, YouTube is there, why should I read and waste my time? I agree with you totally, you are right. Still try to read this book, Tech Phoenix, or go to Google Gemini and ask it to summarize Tech Phoenix for you, but it won't be the same as reading Manoharan's own words. Manoharan will come out of the book and speak to you. Our late lamented Padma Shri C.A.T. N. Manoharan, past president of the institute, will come out of the book and talk to each and every young member. In fact, whenever I used to meet him in Chennai, on various occasions in Freemasonry, otherwise, I used to beg him, sir, write your autobiography. Write your autobiography. We need it. He was also planning. He wrote in one magazine, it was published in Tamil, in a sort of his autobiography in serialized form. But it could not be made into a book. I wish somebody would write his biography. It will be an inspiration. A man from a small village called Gudiyatham in Tamil Nadu goes on to become the chairman of Canara Bank, the director of Satyam, past president of the Institute of ICAI, and so on and so forth. So how he did it is an inspirational story for every one of you and me. Okay, so my suggestion: read this book. It's a fantastic book on various topics of interest to chartered accountancy students. See, sometimes, we can't just teach the material and, subject. Sometimes I go out of that subject to help you, to give you some inputs on what is relevant. So TechPhoenix will give you a good idea. But even in TechPhoenix, one complaint I have is that while the revival was very beautifully discussed and explained in the book, the original cause of Satyam's failure has been only simply given. In very simple terms, it has been given, and T.N. Manohar gives very beautiful ethical lessons there. No doubt about ethics and corporate governance. But the story, the way I told it, has not been told. How did this fraud happen? The mechanics of the fraud have not been explained by anybody. Of course, it is there. I'm telling it only from those sources. I'm not telling from my imagination. There are some reported sources, but I've collected it and I have understood it. And that's how I know the whole story. I've connected all the points for you, how the fraud happened. And so basically, Satyam, there was a need for recasting and revising of the books. Therefore, the section was added by which they said, relevant really. So the notice should be served to the applicants, and their representation also will be taken in the other people. And finally, the tribunal or court will pass an order for revising and recasting the application. Simple section. See, this section will never be used. Why? Because Satyam is one-off. I will tell you why. Today, no other company can do this fraud again. This fraud they can't do. Why? Because Satyam was exempted from service tax and completely export. So tax on profit also was not there. They were exempted from paying tax. Special economic zone. Therefore, they could play this game. Otherwise, the greatest deterrent for this game is they have to pay the tax and the GST. So they were not having any GST. That is why they were able to play this game. Today, no, it's not so easily. The income tax authorities in the current financial year 23-24 observed during the assessment proceedings the need to reopen the accounts of Chetan Limited for the financial year 13-14 and therefore filed an application before the NCLT to issue the order to Chetan Limited for reopening of its accounts and recasting the financial statements for the year 10-11. So the current financial year 23-24. Okay. So they said they recast for 10-11. Now remember, you can go back only 8 financial years. Simple. Because accounts will be preserved only for 8 financial years. Therefore, you can go back only 8 financial years immediately preceding the current financial year. So, 23-24. That means you can go back only 8 years. So, 23, 22, 21, 20, 19, 18, 17, 16, 15, 14. So, 14, 15. 13, 14, you cannot. Okay. So, this is the point. 8 years. Okay. So, you cannot go back earlier than 8 financial years is the correct answer. Now, this is voluntary revision of financial statements. Voluntary revision. Now, this is case where the board of directors finds that there is something missing. It appears to the board of directors that the financial statements or board report does not comply with 129 or 134. It's a very broad non-compliance. So it could be accrual basis, something could have been not provided, or anything, accounting standard non-compliance. Everything will be covered here. And board's report also, some disclosure was not made. Then they can prepare revised financial statement or board's report in respect of any of the 3 preceding financial years. They apply to the tribunal for prior approval. Then tribunal gives notice to central government and other bodies, takes into account, then permits them to revise, and a copy of the revised financial statements and board report will be filed with the registrar. So this is voluntary revision, whereas here application is by central government, etc. Here, and that too, there should be fraud and mismanagement, whereas here there is no fraud. Even a good company may have made a mistake. They want to correct it. This can be done. Such revised statements can be made, not prepared more than once in a financial year. So in one financial year, you can do only one revision. Now the broader question, can I revise the accounts of a financial year many times? I think you can, so long as revision is not done more than once in a financial year. Okay. So suppose 25, 26. In 27, I find there's a mistake. So in 26, 27, I can revise it. Then again 27, 28, I can again revise 25. But in 1 year, I can revise accounts only once. Revision of accounts can be done only once. Okay. I don't know what their intention, because they use the word in a financial year. Whereas if their intention was that one time only you can revise, then they should have said more than once for your financial year. Okay, for year. If they told more than, then only once you can revise on financial report. But the way it stands now, if you do it in multiple periods, you can revise the same financial year multiple times. Is that intentional? I do not know. So where copies of the previous financial statement or report have been sent out to members, then the revision must be confined to the correction in respect of which the previous financial statement or report do not comply with the provision 121. You can't make something totally new here. Okay. What was there? What is the mistake? Correct it. It's only for correction of mistakes. Omissions also can be taken. And any consequential alteration also can be done. See, sometimes we find certain errors are there. We want to correct it. There was no provision in the law. Now they have given a provision subject to judicial scrutiny. You have to apply to the tribunal. It is not RD. Okay. CG also has made certain rules and all that. Not with him. Okay. So next class, we will take up NAFRA. In the meantime, let us go for multiple choice questions. Okay. Next class, we will do NAFRA and also yeah. See, Kuldeep ji, Satyam did not have any tax. It was exempted from tax under the SEZ law, 10 AAA. Therefore, they didn't pay additional. Maybe in some years, they might have paid little, but nothing great. Okay. So that is the thing. See, as I told you, I have played multiple roles. I have played a role of practicing CA. I played the role of Secretary of the Tamil Nadu Investor Association. I am a public speaker at various forums. So wherever I go, I represent our institute. Never ever forget that. As a practicing member, or as any other member also, but practicing members more than others, we represent the institute. So what we say, we have to enhance the reputation of the institute. You as a student member, you also have the reputation of the institute, sir. If I do something shameful, remember, I am shaming the institute also. Therefore, I should ensure that my behavior is publicly decent. See, a chartered accountant behave indecently in public, shame on the institute. So it's not only ethical, decency also has to be there, public decency. We should set a role model to other people. Members of the institute and student members like you, we should be a role model to the public. We should not be people who will be find, I see that fellow is, because invariably they say he says he's an auditor, but he's behaving like this. So therefore, we have to be very, very careful. We should be like Caesar's wife. We should not only be seen as pure, we should be pure, we should also be seen as being pure. Okay. This is my humble submission. Don't mistake me for giving this suggestion. But from based on my experience as a chartered accountant for the last almost 40 years now, I humbly submit this for your kind consideration. So quickly, some multiple choice questions for the next 10 minutes to test your awareness. Yesterday, I think we came here. This I will verify and get back to you by the next class, 100%. Okay. Yeah, 10th question onwards, we will see. Maybe another 7 or 6 or 7 questions we will see. So, like the other class, you just give number of the question and your answer. I think, yeah. Absolutely. All of you are right. 10D is the correct answer. I don't see any deviant answer except Sangeeta Vani, as usual, gives me B. See, the company must disclose the deviation, reasons for the deviation, and the financial effect. All of the above is the correct answer. Okay. So 10D. Sangeeta Vani ji, you are the only person given B. Maybe if it is a typographical error, change it. Otherwise, be corrected. All of the above have to be disclosed. Right? Eleven. Thank you, Ms. Sangeeta Vani. Yeah. 11. Give your answers. See, listed companies are governed by SEBI guidelines. They are anyway required to give interim accounts, periodical. Under this section, unlisted companies also have been brought into the private companies are not covered. Government companies are not covered. So, many of you have given B, except a few who have given A. And Kuldeep has given B. Section 129A does not apply to government company. Okay. Only unlisted. See, listed company already covered under SEBI. They are governed by SEBI guidelines. So those companies which are not covered are unlisted companies which are as prescribed. Okay. Unlisted companies. You have to guess here. Let's see. It was not taught by me, but now we will. Yeah. See, 30 days is always a good guess. Right? 30 days is always a good guess. You will not go wrong with 30 days. Who can apply for reopening of accounts? Auditor, shareholders, company itself. Yes, all of you are clear. 13B, option B. Super. Chandana Sahu, welcome. You are from the eastern region. Wonderful, madam. Nice. Yes. Central government, IT department, SEBI, other regulatory body or concerned person. See, that length itself would have given a clue. See, that is why MCQ actually easy to answer, yeah. But it doesn't assure depth of knowledge as a examining technique. Time limit for reopening of accounts. Fourteen. 14B. Correct. 14B. 13B is also correct. 14B is also correct. Okay. Voluntary revision of financial statements can be done for how many preceding years? You know that. No limits, nothing. 5 years sounds interesting, na? All are B. Predictable, na? Right. It's the correct answer. Friends, did you understand what I told about in a financial year and for a financial year? See, you can revise the accounts of your financial year any number of times. But in one financial year, you can do only one revision, one time. In that one revision, you can do 3 years, 4 years also together, no problem. But only one time you can do revision. This is the current meaning of the wonderful section of the Companies Act. If that is the intention of the legislature, I'm happy. Okay. Beautiful. Let us see if the next question is taught or not. Whose approval is mandatory for voluntary revision? I think the answer came on screen. Let us see if anybody. Too much, yeah. Everything B, 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 B. Thank you for your wonderful cooperation in, giving answers. And so, as of now on this topic, we have done 16 multiple choice questions. 1-6. Totally, I'm planning to do, if inshallah, 30, 30. In the next class, another 15 we will do, or 14 we will do, depending on the next question. NFRA we are not taught. So NFRA we will move next. As of now, we have come to just another 2 minutes before we have to conclude. So let me sort of wait for any more questions are there in case you want to ask me any questions. See, up to now, some people are asking what is important, etc., etc. Now, so in this topic, I'll tell you the important parts so that make a note of it now so that later on you won't have a doubt. Okay. Here, inspection of books of account by director. Inspection of books of account by director. Maintenance of books of account in a place other than the registered office. Maintenance of books of account in a place other than registered office. Inspection of books of account important. Also, in financial statement, maybe financial year, compliance with accounting standards. In CFS, this exemption for certain companies, these 3 criteria, important. Then signing, very, very important. 3 times it has been asked. This one slide, if you know, you can get one question. Similarly, signing. Director's responsibility report. See, some people are asking now, Santosh Dash and all. What is important? What is important? I hope he is making note of this. Director's responsibility important. Signing, I mean, we already saw. Then this also is important. When lesser notice can be given. When lesser notice can be given. Important. Also, what happens? The time limit for circulation. This one, very important. So small points. You can easily remember. Just read it once. Remember, the exam, right? Simple. Not complicated provisions. Only director's responsibility statement, 6 items are there. Okay. Then, of course, 130 and 131 both be thorough. Yes. That is my humble submission to all of you. And yes. Now, at this stage, I'm very happy to hand over the proceedings to Shraddha, Mrs. Shraddha, who is here with us. Madam, would you like to take over?
Yes, sir. A very good evening, students. So, one like sir said that students are asking that what is important and what is not. Good evening, Adil. Uh, good evening, Saiba. The point is,
Madam, with your permission, I will leave, madam. I will leave.
sure, sir. Sure, sir.
Okay,
Thank
you,
you,
madam.
sir. Thanks for such a wonderful session, sir. So, students, the point is that if you're asking about important things, like 137 is there. So it's an important section. But seeing the current paper pattern, what I have seen for the last 2 to 3 attempts, a lot of questions are being asked from topics which were primarily not very conventional topics, like the earlier, like 137 is there, CSR is there. So CSR at one time used to be the celebrated topic. Right now, they are picking up very small points and asking. However, if I am saying this, I cannot deny the fact that students cannot learn everything. So, like Sir told you about 129, the best way to do sections right now is reading them over and over again. Like you have just read it right now in the class, read it whenever you get time, like Wednesday, today is Wednesday, and next class will be on Monday. Start reading it. If you have read it twice or thrice, you will get the knack of the section. Otherwise, 129, instead of asking a particular section like in 128 and 129, you can go about that signing and who is responsible for books of accounts, maintenance of books accounts. Then section 135, if you see the past papers, okay, so Saipa Virali is asking how to retain these many topics in exams. Then again, the key is, since you have understood, if you have understood the section here, the teacher can only make you understand the section. Some of you cannot learn it like in one go, and I wouldn't say to ratify the sections. I would rather say read it over and over again, make your small notes. I always advocate a student who must have read from me before, so I always say make the notes then and there in the copy itself, or then and there in the book itself. Good evening, Linga. So you will retain it, and the brain is such that you can remember all these sections. And like many students keep on asking that how will we remember the section numbers? At intermediate level, it is not compulsory to remember the section numbers. Even I cannot remember every section number if I would have tried to learn it. The main thing is, while you are reading a section, if you see the study material or for any detailed book for that matter, it always starts with the wordings like as per section 129, or they would be writing somewhere section 128. So whenever you are reading a provision, while reading, always that as per 128, don't ratify it. It would automatically get into it. Now, coming to your point, you said that how will we remember all this? Believe me, I have been through this stage. You are going through this stage. It's not like हम अगर उसे humongous बना देंगे ना, तो it will become humongous for you guys. In fact, आप लोगों के लिए it's not humongous. आप कर सकते हो. It's just that have that faith. What my teachers told me today, I will be telling you that only. If you keep on thinking, how will I do it? You will not be able to do it. Start just reading it and you will remember it. And believe me, inculcate that point in yourself that you're already a chartered accountant. I have always told this in every class of mine. Always believe that you're already a chartered accountant. And when you are writing or reading the answer, read it as if somewhere in future you have to explain it to your client. I hope so. I am able to make a point to you. So Kuldeep is asking, as CA need to use Companies Act in future, every section and provision must be known. Companies Act, if I would say, students, you must be thinking it's just a Companies Act. I might not be so much in touch of it once I become a chartered CA. But once you are climbing the ladder, and especially in not only big fours, but also in corporates, the industries. So I'm not talking about the lower level, but the middle management and the higher management. They are day in, day out dealing with if they're dealing with a client, or they are working something in the industry, something will come up to them where they will be either using some AS or they will be using some kind of Companies Act. Something as simple as issue of shares may come in front of them. Resolution, they don't have to pass those resolution. That is the work of the company secretary. There will be definitely someone who will be telling you, okay, you have to fulfill. But once you have that knowledge, you are in a better position to put your point forward across to a larger stakeholders. So read it and don't be afraid of it. I hope I'm clear. Any more queries? Thank you, Saipa. So I think our students are not having much query as of now. So we can close down the session. Technical team?
Ma'am, ask the student to fill the form, feedback form.
Okay. Okay, students, request you to kindly fill the feedback form. And I would also say that if you are having any issue, then do let us know. Okay, companies like audit and advanced accounts are greatly interlinked. Very much. Don't read them like see. I understand that right now you have to pass your examination. That is your prima facie aim, and that's what we also want. But when you are in a good mood and you're reading something, now always read it from the point of view as if you are explaining to your client. You have not explaining to your client, but at some point of time you have to explain it to your client. You will remember it in a much better manner and start preparing your side notes in your book itself. I'm damn sure you will be I'm damn sure you will be able to do it. And please fill the form. I hope all your queries have been answered. With that, we will close down the session for this chapter, Accounts of Companies. Have a good night, students, and wish you a very happy Diwali, since I think we will not be meeting before that. So stay safe, play safe, and and what should I say, अपना बेसिक पढ़ाई करते रहना और उसमें enjoy the festival. अभी आपका पेपर जनवरी में है, ठीक है, तो प्लीज enjoy this festival very much, ठीक है, and I hope so in the next class you will be gaining something more. And Ajit, are you there? Technical team, Ajit,
Yeah, ma'am.
koi Ajit, the students are asking that how to fill the form.
Ma'am, after closing the session, there is an
Mhm.
option of LVC feedback form LVC.
The students, once the session is over, there is a link. Okay.
There is a tab for feedback form.
Okay, there is a tab for filling up the feedback form. You can fill the feedback from there itself. Okay. And thank you. Have a great day. Okay. Bye, beta. Yes, session over. Happy Diwali. And happy Diwali, my technical team also.